You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you, and you can reach out to me directly, 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. We celebrate every day on Ron Siegel Radio. Let's see what we've got good to celebrate today. Well, gingerbread house day. Is anybody making a gingerbread houses right now? I saw one friend that had made gingerbread houses, and they had a competition on Facebook. Pick the best gingerbread house. That would be fun. We might want to consider doing that. Okay, let's see what else are we celebrating today. I see National Poinsettia Day is in there for today. Oh wow, having beaten Ding-a-ling Day. Oh, that's a Santa ringing the bell, right? Ding-a-ling. Or some people refer to me as a ding-a-ling. Could be one or both. But having beaten anorexia, National Ambrosia Day. I haven't had ambrosia in ages. I can't even remember the last time we had ambrosia. Look at all that whipped cream on it. Loving, you did great. Look at that. All that whipped cream. I am a whipped creamaholic, so I enjoy it. Let's take a look and see what the markets are doing today. Right now, the Dow Jones Industrial Average is up 275 points. The S&P 500 is up 20. NASDAQ is up 32. Oil is up $2.32 a barrel. 10-year Treasury is up 8.5 basis points. A lot going on right there, watching all of these different numbers for you. Well, we're all just waiting to see what is the Federal Reserve going to do. That's the bottom line. And depending upon when you're listening to this broadcast, we record our shows at 9 o'clock in the morning, so sometimes the items that occur during the day, we don't have them all filled into the show. But I do want to give you a few items right here. Just, it is the holiday season, and I'm in a holiday mood, so I'm going to really challenge Lovin here right now because I got so many things to give away today, right? So why do I say I challenge Lovin? So the bottom line is, if you're watching us on ronsiegelradio.tv or any of our socials, we put all these links for these things that I give away right here on our page. So Lovin gets to find all these banners as quick as I talk about them. That way you can see them if you're watching. And if you're not watching us, if you're listening to us on one of the radio station affiliates, well, you can go to ronsiegelradio.com in our archives, and you can actually watch any of our broadcasts. First thing I'm going to give away today. How about a free sheet on credit mistakes? rsrcreditmistakes.com. rsrcreditmistakes.com. You can go there. I don't remember whether I always confuse these things. So I don't know whether we've got 22 credit mistakes or we've got 6 credit mistakes. Let me find out. But we've got a whole sheet of credit mistakes that you want to avoid. Why? Because everything that you do in a credit world is going to be generated from your credit scores. And I deal in the world of FICO scores. I don't deal in the FACO numbers. I know everyone said credit scores. I deal with FICO scores, not credit scores. But I'm going to give you free 6 harmful ways to ruin your credit score. 6 harmful ways to ruin your credit score. All you have to do is go to rsrcreditmistakes.com and fill out a little form there so I know where to send this to, because we're on radio, we're on socials. rsrcreditmistakes.com. Now, because we like you, we're going to give you the other side of this as well. 22 ways to increase your credit score. RSR Credit Tips rsrcredittips.com. All you got to do, again, go to the web, the link there, fill out a short form. It'll take you and I promise you know the answer to every one of these questions. But you can go right there, fill out the little form, we'll send you back rsrcredittips.com, rsrcredittips.com. The end of last week, we also came out with our new home buyer's guide and home seller's guide. So if you go to rsrhbg.com, rsrhbg.com, you can get a free copy of the buyer's guide, rsrhsg.com. Gives you a copy of the free home seller's guide, rsrhsg. We've already given away. We're not even 5 minutes, 6 minutes into the show, and we've already given you 4 things totally free. All you have to do is tell us where to send them, and we send them. It's about as simple as it gets. Isn't that a? I think that was an Old Dominion song. SIMPLE. Simple as it gets. That's all it is. You just go there and get the stuff for free. Why do I mention that? Well, because today our topic, we're going to be chatting about your home and a home ownership being an investment in your future. Well, you can buy a house right now. And I know it's the holiday time, and last thing you're probably thinking about is buying a house, but you should be, because it's all about your future. Now, before you buy the house, what you want to do is you want to know, what's it going to cost you? What is your monthly payment going to be? Are you going to be able to afford it? Well, the bottom line is the better your FICO score is, the higher your FICO score is, the more you're going to be able to afford. The more house you're going to be able to afford, because the higher your FICO score, in most instances, the lower your interest rate will be. Now, I'm not going to guarantee you anything. I'm not offering you a loan. I'm just saying that if you will get your FICO score increased, and there are lots of tips in there to increase your FICO score. There are mistakes people make on their FICO score. Here's a couple of mistakes. And I'm not going to go into exactly how to fix them right here, but if you watch our shows all the time, you'll know. And Levin's going to give you another one of these links, rsrccpayment.com. rsrccpayment.com. It's a short video that will actually show you exactly how to pay your credit card bills properly. What do I mean by properly? It's so you pay your credit card bills so that you can maximize your FICO score. And you say, well, Ron, I pay them off in full every month. Well, if you pay them off in full every month after you get the statement, you've paid them wrong for FICO scoring purposes. rsrccpayment.com, rsrccpayment.com. That'll help you pay them properly. You know, we talk about that all the time, that you've just got to do it the right way. And if you don't know these tips and tricks, you don't know what you don't know. None of us do. So I wanted you to understand that part. Now, there's going to be some changes in the cash out refinancing guidelines next year. They go into effect in February. So you're going to want to be able to know these things. You're going to want to understand them. That's what we're here for. Now, there is a big spread right now on interest rates. Why is there a big spread over historical numbers? I'm going to tell you that when we come back. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. Home ownership is an investment in your future. We will talk about it. We'll see if we can get 4 car buying mistakes to avoid in a tough market. 4 car buying mistakes to avoid in a tough market. All that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in under a minute.
Ron Siegel Radio, your home and mortgage connection.
79% of all credit reports have errors that should be corrected through factual disputing. You could be saving thousands every year if your report was accurate. CreditSanitizer.com provides a free credit report audit when you furnish a specific $1 credit report. You can use this information to request corrections to your report and potentially save thousands of dollars. Get your free credit audit at CreditSanitizer.com. That's CreditSanitizer.com for a free credit report audit. CreditSanitizer.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. 1990, the Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990, 800-306-1990. S&P 500 now up 19 points. Let's take a look and see what that means for the 10-year Treasury. Now it's only up 1 basis point. If you remember earlier, I told you it was up more. The mortgage-backed securities are flat right now, and every day at this time, OBMMI. They provide the most comprehensive, accurate, and timely information ever conducted in the mortgage industry. Well, I got the wrong one on my screen. OBMMI. Let me find the report here so I can give you the right data. And again, not an offer. This is just reporting what's gone on. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. On Friday, conforming loans locked at 6.35%. The 30-year jumbos locked at 6.271%. FHA locked at 6.356%. USDA 30-year, this is for the rural areas, generally no down payment required, 6.327, and the best loan on the market for those that earned it, the 30-year VA loan, 6.175. This is where they locked on Friday. I don't know what the costs were on them. I don't know what the points might have been paid. That's all. We're just giving you the data that we get straight from OBMMI. And the reason all of this is happening, why are the rates doing what they're doing? Well, there's a lot of data coming out. Some of it is what we're expecting. Some of it is misleading. We're going to talk about all of it. So there is an important auction today. It's a 10-year bond, Treasury bond auction. And if you remember last month when they had this auction, was right before the CPI numbers came out. And the auction, they didn't want to buy a lot of them because they didn't think the bond prices were going to go up, and they did. So we'll see if they learn from last time. Here's what we're expecting on the CPI report. The economy has clearly been slowing. There are flashing signs of recession all over. We were correct in believing that the core inflation would start to roll over on November 10th. We told you that way back when we received the October reading because of these slowing signs and tougher comparisons from last year. For that same reason, we think we will continue to see inflation move lower and rates to continue to follow. Remember, CPI is a rolling 12-month report. If you add the previous 12-month readings and account for rounding and compounding, you will come up with the year-over-year figure. The previous report showed headline of all-in inflation at 7.7%, and core inflation, which strips out food and energy prices and is the main focus of the Fed, was at 6.3%. So we're watching that one for you. We will watch closely. CoreLogic, their third quarter equity report. CoreLogic released that Q3 home equity report showing that 37% of homes are owned with no mortgage, called free and clear. 37%. And those with a mortgage saw equity grow almost 16% since last year. The average home equity gained over the past year is $34,000. Remember, that's a national number, probably higher here in California. Mortgage properties with negative equity increased slightly from the second quarter, but are still down 9.8% from last year. Only 1.9% of mortgage properties have negative equity, down from 2.2% last year. For reference, negative equity during the housing bubble, 25%. Ow! So we're watching all of that for you. That is the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990, 800-306-1990. So let's give you some background data. Let's look at some of the data and some of the services that people just don't want to talk about. Why don't they want to talk about it? I don't know. Maybe it doesn't fit the narrative of what they're hoping to get from some of these data, but hey, we'll give you the data that we have. We'll go over it all the time. Every month I do a little bit of a recap on some of these numbers. So one of the things that I want to chat with you a little bit about is the spread between the 10-year Treasury and a mortgage-backed securities. So are we going toward a return to a normal spread between the government borrowing rate and the home purchase borrowing rate? Will bring that 30-year mortgage rates down quite a bit. Here's the deal. For almost 50 years, the 30-year mortgage rate has moved in unison with the 10-year Treasury rate. Now, we watch the 10-year Treasury rate has almost doubled this year. We've seen those numbers. We understand that. So what's driving all of these things? Let's see if I can get this slide a little bit bigger so that an old man can actually see it here. So I've actually I pulled these slides, and we share this PowerPoint all the time. If you're on during our commercial breaks, these are actually the slides that we're running during the commercial breaks. And taking a look at the normal spread between that 50 is generally 1.7% between the 10-year Treasury and 30-year bond. And we've watched this, and this spread has been growing. We're watching why. So we're looking at right now the spread on the 1st of December, the 10-year Treasury was at 3.51. So let's understand this. From 2000 to 2021, the mortgage rates were around 5.28%. We had a 1.79 spread between for that 21-year period, a 1.79 spread. Right now, we're looking at a 2.99 spread. Now, let's just take a look. And even if you're looking at the slides that we have, the slides are based on when this was produced, right? So it takes a little bit of time for this production to get done. But let's go back and take a look and see, okay, where is the 10-year Treasury right now? So as I'm recording this, the 10-year Treasury is at, say, 3.57. And if we add the normal 3.57, and add that 3% spread, so 3.57 plus is 5.56, but we're not there. So we're even higher than what that's been. So 3.57 means we should be at about a 5.5 interest rate if we were following the history. Now, why are we not following that history? Well, because interest rates have gone up so much recently. The problem is that the bond market knows that everybody and their uncle is going to refinance as soon as they can. Well, if that's the case, the upfront costs that are generally amortized over a couple of years, well, those have to be covered up front, because if the bond market believes that you're going to refinance soon, and in many instances you should, if you've bought a new house in the last 6 months, you may want to take a look at this. Now, are rates going to go down further? I don't know. I can't promise that. I think they will. Most forecasters say they will. But from a strategic standpoint, does it matter? And why do I say does it matter? Well, I've been sharing with you for quite some time that if you were following the mortgage two-step, and I'm going to have to get a domain for that so that you can get that. All right, we're going to end up calling it RSR two-step. But if you've been following that mortgage two-step, it's basically saying, well, it should be a three-step, but we call it a two-step. First step is I talked about in the last segment. Get your credit scores in order. The two-step is basically get rid of your debts. Do a debt consolidation loan right now. And it does not matter what your interest rate is. Why? Because you're not going to keep it very long. So in that instance, what you say is, hey, Ron and your team, I want to get a debt consolidation loan. I don't mind if the interest rate is higher than the market because I don't want to pay any costs right now. I want all my costs rolled in. And hey, we could do that. It's not that difficult. We're going to use a little bit of equity for that, but it's not that difficult because what our plan is when the interest rates come down, if they follow historical norms, and I can't promise they will, but if they follow historical norms in the next 6 to 12 months, interest rates should be lower. Recessions historically mean lower interest rates. As the market starts flattening or normalizing or realizing where we are, we should see that spread come closer together as well. As inflation drops, we should see interest rates drop. These are all historical items that we see on a rate basis. Again, I can't the history, but I will say that history is usually a pretty good indicator of what's going to happen in the future. So you go and you do that two-step. So you get rid of the debts now. Now, why do I say it doesn't matter what the interest rates are now? Well, let's just see if I can throw some numbers in here. And let's just say that you've got an $800,000, let's throw in an $800,000 loan. And we say it's at 7%. And again, I'm just educating. This is principal and interest, not throwing in any kind of costs in it, just because I want you to understand what the difference in interest rates are. So $800,000 loan at 7%. On 30 years is $53.22. If we look at 6%, it goes down to $47.96. $47.96. Okay, so now that's $500 a month. Okay, and nobody wants to pay an extra $500 a month. But let's just say that you can roll all your costs into it. So you're probably looking at the first 6 months is basically just the break even because you're going to pay more to get a lower in. Now you may get a qualify for a lower interest rate than the 7 and 6. And there are numbers all the way in between that as well. But that 1% will get you a lot of money for covering costs. What if we said 6.5 even? Right. I'm just throwing out numbers. That's 5,056. So now you're looking at $250, right? At 6.5%. See, it's just math. It's not even loan numbers. It's just math. Right. So the difference there, $250, now you're looking at maybe 10 months of break even if you look at the costs of doing a cash out refi. Now, when it comes time to do that cash out refi in 6 to 12 months, when we anticipate, no promises, that interest rates will be lower, well, now you're going to go and you're going to look and say, what hypothetically happens if that interest rate is at 5.5? Well, now you're at $4,500 a month, $4,542. Think of the way these scenarios play out, because now you're saving another $250 over that $600 even right now. Right? Think about these numbers. And I know I'm throwing a lot of numbers at you, but we have to throw numbers at you like this because I'm trying to educate you on this mortgage two-step. And I think we'll be able to get the domain name RSR two-step. And I'm going to try and get that before the broadcast airs. But RSR two-step, try it at rsr2step.com, and you'll see a full example of this. But the bottom line is this is called planning. This is the strategy to help you better yourselves, to make that future investment in you. And not just say, hey, what's the interest rate? Because sometimes the cheapest interest rate is not in your best interest. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, homeownership is an investment in your future. 4 car buying mistakes to avoid in a tough market, and more. You can reach me anytime. Off-air number 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in less than a minute.
Ron Siegel Radio. Your home and mortgage connection.
Is your budget getting blown up with high prices of gas and increased costs for other household needs? This is Ron Siegel, host of the daily home and finance radio program. Did you know if you have a low interest rate mortgage along with auto debt, credit card debt, or student loans, your family could potentially save $500 or more per month by restructuring these debts? If you'd like a free Borrow Smart analysis with our team, let's book an appointment to see how we might be able to relieve some stress. Schedule an appointment at rsrbsa.com. That's rsrbsa.com for your free Borrow Smart analysis. rsrbsa.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. Homeownership, it is an investment. Hey, I should tell you about RSR Home Scout a little bit. Do you want to know every month about what your property value has done? Log in. It's free, rsrhomescout.com. Log in, put your address in there, and every month we'll send you an email with what your property value is, what it's done. And we're going to show you what that Z company is saying about it. We're going to show you a few other sources on what they say the value is. And then if you look at the very last option under rsrhomescout.com, very last option is actually one of the sources that we have available in there. That's actually a source that can be used to refinance in many instances. Is it a guarantee that the bureaus will use that number? No, but it is a good number that in many instances we find the bureaus will actually use that data for you to generate information about your property. So rsrhomescout.com, and that last one, it's Quantarium. So the Home Scout Insight number comes from a company called Quantarium, and Quantarium is one of the resources that's used, from what we're being told, by the bureaus to determine if they're going to give you a property inspection waiver. So it's great information right there. And again, if you log in, fill in the information, give your address, you'll actually be able to get a monthly email telling you about the value of your property. And I just put in one property. Quantarium is actually the lowest value on all of the sources out of the four. So it's got Atom Data, Zillow, SmartZip, and Quantarium all built right into it. So just give you a little bit of information there so you understand what the numbers look like. Just throw that out there. rsrhomescout.com, rsrhomescout.com. Homeownership is an investment in your future. There are many people thinking about buying a home, but with everything affecting the economy, some are wondering if it's a smart decision to buy now or if it makes more sense to wait it out. As Bob Brokesmith, president and CEO of the Mortgage Bankers Association, MBA, explains, quote, "The desire for homeownership is strong. Many prospective buyers are waiting for the volatility in mortgage rates to subside, as well as for a clearer picture of the economic outlook," unquote. If you're in that position, remember that it's important to consider not just what's happening today, but also what benefits you may gain in the long run. There's a lot of information out there about how home ownership helps build a homeowner's net worth over time. But even today, many people think first about things like 401ks before they think of owning a home as a wealth building tool. It's especially important if you're a young prospective home buyer to understand how home ownership is another key way to invest in your future. An article from Bloomberg notes, quote, "Millennials have higher average 401k balances than Generation X did when they were the same age, but they're not any better off financially. A lot of that has to do with being less likely to own a home, unquote. To help you understand just how much owning a home can have a positive impact on your life over the years, take a look at what the data shows. The same Bloomberg article helps show the gap in wealth between renters and homeowners who are 65 years and older. If you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 video feed, you are seeing the chart that shows the wealth disparity for older Americans, households age 65 and over. We got the renters and we've got the homeowners, and we've got their median income and net wealth on both of those. So if you want to create wealth to help set you up for success later on, it may be time to prioritize home ownership. That's because whether you decide to rent or buy a home, you'll have a monthly housing expense either way. The question is, are you going to invest in yourself and your future, or will you help someone else, your landlord, increase their wealth? Bottom line, before putting your home ownership plans on hold, let's chat about your options. That way you'll have expert advice on how to make the best decision right now and the best investment in your future. And as I always ask, if you have any friends, family, or coworkers looking to buy, sell, or borrow on real estate, give them my number, 800-306-1990, 800-306-1990. Remember, rsrhomescout.com, rsrhomescout.com. Get on there, log on, save a folder for yourself. And hey, if you want to shop for properties, you can do that right in there as well. If you're thinking about, maybe I'll buy something in the next 6 to 12 months. Well, you might want to know what the market's doing in the area that you're thinking about buying. Just throwing that out there for you, rsrhomescout.com. It is a free tool from your friends right here at Ron Siegel Radio, rsrhomescout.com. So let's get back to our conversation. We've been chatting about the monthly market report. And if you watch us on any regular amount of time, you know that I usually have a coworker with me, a colleague with me, to give the millennial point of view. She's not feeling too up to par, so the old man's got to try and do it on his own. Housing market is expected to face continued uncertainty heading into 2023 as consumers, financial markets, and policymakers work through their respective challenges in today's economy. We know that, according to Ali Wolf, chief economist at Zonda, because we see a slowdown and we see the inflation comparison start to become more and more favorable. You'll start to see that inflation number move lower, 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 lower. And as a result, mortgage rates should move similarly on a downward trajectory, probably giving us around 5%, maybe below 5% in the next 6 months, according to great source, Barry Habib. That's with MBS Highway. Barry Habib does a great job, won a lot of awards in the industry for being the best economist out there. Now, there's some people that challenge that, but his peers, I think they call it a crystal ball award. They've given him the award, I think, 3 times in the last 4 or 5 years. So his peers say he does a great job on this. Now, one of the things I want you to be aware of is sometimes we get headlines out there, and there are certain people that technically they're giving the actual information, but maybe they're still a little misleading. So I've got a headline in front of me from one Diana Olick. And I've said many times that the next time that she gets something right and tells people the truth, all the facts, it might also be the first time. And it's just my opinion on Ms. Olick. But she says in this article that was on CNBC, homeowners have lost $1.5 trillion in equity since May as home prices drop. Really? Now, I wonder where she's coming up with this data. Maybe what she's looking at is the fact that maybe people have taken the money out doing that mortgage two-step that I talk about. If we look at a chart, which we do have, a drop in tappable equity, in putting it in perspective, and tappable equity is the amount of equity you have in your property, leaving 20% behind. So it's tappable equity is that first 80% of the equity in your property. So if you've got $1 million house, $600,000 loan, the difference between $600,000 and 80%, $800,000, that's your tappable equity, $200,000. So if we look back in 2020, the tappable equity was way, way less than we have right now. In fact, I don't have the exact numbers on there. 2005, we had 4.9 trillion in tappable equity. Right now, we have 10.3 trillion. In 2021, we had 9.9 trillion. So yes, the property values went up a lot the last couple of years, and people have decided to make a decision. They wanted to do some home refinancing. They wanted to do some home remodeling. They wanted to add that office that they might have needed during the pandemic. All of these things happened. So homeowners, according to Kinisia Patapov, economist at First American, homeowners have very high levels of tappable home equity today, providing a cushion to withstand potential price declines, but also preventing housing distress from turning into a foreclosure. The result will likely be more of a foreclosure trickle than a tsunami. You know, we're just not seeing any kind of real support for what Ms. Olick has to say about where prices are going, that they're really dropping. Maybe they're dropping a little bit in some of those proper areas that prices took a huge jump. But on whole, are they really dropping that much? I don't think so. And I think people still have a lot more equity. So if you're one of those folks that are out there saying, you know something, Ron, I'm going to wait for the prices to drop. Well, I'm not exactly sure they're going to drop that much. They might drop a little bit, but I'm not sure they're going to drop that much. I just throw that out there for you that, you know, what's going to happen? Do you really think that we're going to see a big drop? I don't think so. And I can show you the numbers of what's really proving that to you. So don't go really thinking that you're going to wait until the first of the year or later, and you're going to have all this stuff coming about, and we're going to see a big drop in the values. Not going to happen. And in my opinion, you know, just take a look for yourself. That's all I can say is take a look at the numbers yourself. If you want some data that shows all sides. Now, I have no vested interest. I don't know what Ms. Olick's interest is in trying to say that, you know, that she doesn't want to have people knowing these data, knowing what's really happening in the market. I have no idea why she does that, but she's constantly down on real estate. And maybe it's because she's on a financial services channel. Maybe because they get paid by the big broker dealers. I don't know her motivation. I'm just saying that if you look at the real data and look at the numbers behind the data, you'll see maybe maybe she's giving you actual numbers, but maybe it's not quite the full story. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, 4 car buying mistakes to avoid in a tough market and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. We'll be back in under a minute.
Ron Siegel Radio, your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. 1990. The Your Credit Matters segment today being brought to you by creditsanitizer.com. You have a credit report. It is wrong. What are you doing about it? Credit Sanitizer. They've got the solutions. You just need to make the call, 800-306-1990. 4 car buying mistakes to avoid in a tough market. It's a tough market for car buyers. The average price of a new car is up 20% from last year thanks to a microchip shortage. Dealerships don't have enough inventory to meet demand. Many buyers are paying above the sticker price rather than leave the car lot empty-handed. To top it off, interest rates are higher. The prime rate is up to 7%. In March 2020, it was 3.25. So financing is more expensive too. Buying a car in any market requires some research and planning. If you find yourself shopping for a new or used car in a tough market, there are some key mistakes you should avoid. Paying too much for financing. More people are opting for auto loans with longer terms to get a lower monthly payment. There's a trade-off. Spreading your payments out over 72, 84, and 96 months makes your loan more expensive. That's because rates are higher for these loans, and the balance has more time to accrue interest. Since most vehicles depreciate quickly within the first few years, long-term loans also put you at risk of being upside down. Plus, you're likely to start needing major repairs while you're still paying off the loan. Skipping pre-approval. By getting pre-approved for financing, you can shop different lenders, compare offers, and then choose the best deal before the excitement of a new car sets in. With financing out of the way, you know your budget up front, and you can shop for cars within that range. You can still apply for dealer-arranged financing. For instance, if the dealership is running a financial special and with a pre-approval under your belt, you may have a little room for negotiation. Not doing any research, that's a problem. Research gives you the confidence to negotiate or walk away from an offer when you're sure you can get a better one somewhere else. Start by searching local dealership inventories online to see what's currently in stock, the features and price. Check the manufacturer's suggested retail price or MSRP for the year, make, and model you're considering. That way you can tell when a dealership has marked up the price and, if so, by how much. Forgetting to factor in ownership costs. The factors that led to a challenging car buying market today can also contribute to overall higher ownership costs. Before your purchase, estimate the cost of insurance, gas, or charging costs, and maintenance and repairs. If ownership costs and your auto loan payment are more than 20% of your net monthly income, you could be spending too much. Should you buy or wait? Waiting until the market improves gives you time to let the market cool off. If you're financing with a lower FICO score at a time when interest rates are high, waiting gives you a chance to improve your credit. Of course, that's if you still have reliable transportation and you can wait. Otherwise, if you can't wait, look for the best deal available on the vehicle and with financing so you don't end up overpaying. You might even need to look for a cheaper vehicle. I'm just throwing that out there for you. That could be the case that you might just be biting off something more than what you can afford. And again, how do you increase your purchasing power? Well, you go to creditsanitizer.com. You get that free credit report audit. When you get that audit, you're gonna then need to supply Credit Sanitizer with a $1 very specific credit report. They'll give you that link once you fill out a quick little form on creditsanitizer.com. And then you'll get they'll take care of the audit for you. It's usually a 10 to 15 page report that goes through and audits your entire credit profile and might tell you some things you didn't know and might tell you some things that you did know. I never know what is going to come up in there because you may know some of the stuff already. You may not know some of the stuff. That's why it's always good to have that credit audit. I'm set up for my wife and I. We actually get a message on our phones every time there's a change to our credit report. Why do I do that? Well, number one, it helps me to learn what's causing the changes to a credit report. I've done things that I know is going to make my report drop, my scores drop. I've done things that I know are going to make my scores improve. But I do that because I need to understand so I can share with you what these things are. Creditsanitizer.com, you can get that free report. And obviously, we know that you can go and get the 2 reports that'll help you improve your scores. Again, they're going to be they use a different FICO score when you're looking at cars than what they look at for homes. They have a different scoring model for that. But if you go to rsrcreditmistakes.com, rsrcreditmistakes.com, this will help you with the credit mistakes. rsrcredittips.com, rsrcredittips.com, that'll help you correct those mistakes and maybe improve your score. Remember, nothing has to be on your credit report, but everything that's there must be complete, accurate, and verifiable. That's why the factual disputing basically says, hey, let's make sure it's complete and let's make sure it's accurate and let's verify it is how we make sure that it's complete and accurate. And I also want to make sure that you're paying your credit card bills the right way. rsrccpayment.com, rsrccpayment.com. All of those things are geared to help with your credit scores and education. And we're going to be coming out, I should have had it done already, but we're going to be coming out with a book that you can actually purchase to help you do all this work on your credit report by yourself. And no, it's not going to be an expensive book. It'll be cheap enough that everybody can afford it, or nearly everybody can afford it. That is the Your Credit Matters segment, brought to you by creditsanitizer.com. You have a credit report and it is wrong. What are you doing about it? Credit Sanitizer has the solutions for you. So let's get back and take a look at what else we might have on our, maybe there's some more headlines that we should be taking a look at to see about what's going on some of these headlines out there in the news as we look at the monthly market report to see, are you getting the full scoop, or are you just getting something that somebody wants you to know? Household debt soars at the fastest pace in 15 years as credit card use surges, according to a federal report. Well, let's take a look. In the third quarter of 2019, the average American credit card balance was $32.42, third quarter 19. It went up in the fourth quarter of 19, maybe it was because of the holidays, to $33.91. It dropped way below, right around 2,800 in the first quarter of 2021, 2,800, right around there. Now we're looking at 32.83. So yeah, it's gone back up, but what happened? Well, a lot of people got all these different handouts from the government, didn't need the money, surprise, surprise, paid down their credit cards, and now with inflation the way it is, they've started living off of credit cards again, and the numbers have gone up. So according to Liberty Street Economics blog, that's Federal Reserve's blog, though delinquency rates are rising, they remain low by historical standards and suggest consumers are managing their finances through the period of increasing prices. Does that surprise anybody? Mortgage debt to income ratio near historic lows. Well, that's debt to income ratio near historic lows. That's a great thing. Total quarterly required mortgage payments divided by total quarterly disposable personal income. During the housing bubble, 7.21%. Today, 3.9%. So again, we're seeing some strength in household budgeting. For the second quarter in a row, the mortgage delinquency rate fell to its lowest level since MBA's survey back in 1979, declining to 3.45%. Foreclosure starts and loans in the process of foreclosure also dropped in the third quarter, levels further below their historical average. They keep on going down. So if we look back, 2009, we had foreclosures near record high. The consumers with new foreclosures was right around 2 million, a little bit over. In the first quarter of, or quarters 1 through 3 of 2022, latest data we have, 88,000. So I can't even figure out how to do that math to figure out how small that percentage is of the number of foreclosures in a relative number. So again, we're telling you right here that the housing market, yes, it's feeling some of the effects of the higher interest rates, but it's nowhere near what we had during the crash. And again, I'm going to recommend, and I do this lovingly, giving you these free tools. We're going to give you the new home buyer's guide for the winter, rsrhbg.com, rsrhbg.com. We just released this about a week ago. Just came out about a week ago, the home buyer's guide. And if you're thinking of selling, rsrhsg.com, rsrhsg.com. Now, if you're thinking about selling and you want a roof over your head, you're probably going to be thinking about buying. So the idea here is, I understand that you've got a great interest rate. Maybe you want to just rent that property out. We've got some very, very good property management companies that we can introduce you to. We've also got some folks out there that if you're thinking about buying and you don't want, or selling, and you don't want any of the hassles, well, a quick, hassle-free, as-is sale. We've got investors always looking to make those transactions as well. So any of those things, feel free to give us a call at 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Hey, and as always, I ask you, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Lovin, who's engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
Just push me over the limit. I'd like to call